working with somebody who you're compatible with, who you understand, who you have similar values with. So there's no shortage of people you can learn from.
Oh, I love that. Just a quick question from myself, actually. What sort of securities do you provide for your investors? I don't know if deals don't fall through and things like that. I know you sort of briefly touched on it, but are you able to go into a little bit more detail?
Yeah, so tell me, Gov, what sort of security would you like? So it's a great question. I think I'd like to explain it in a slightly different way because I think it's important not everybody understands it. I see security in 4 ways. So when you take out, say, a mortgage from a high street lender, they typically will give you about 75% of the value of the property secured against it as a first charge. So that's your first layer of security. Then you've got the deposit bit or the gap, the other 25%, and or some people call it the top-up finance, the deposit money, the mezzanine finance, whatever you want to call it. That's the next layer, that 25%. At this point, you've now used up 100% of the equity against that property. Clearly, the second charge who come in on that 25%, or whether it's a second charge restriction, whatever format it might be, are going to be less secure than the first one. The bank's going to be in the safest position with the first charge, or whoever has the first charge. Then you are probably going to have some money that you need to spend on the property, which is going to be the development stage. And that might be another 10, 20, 30, 50,000, whatever it might be, depending on the deal. Now, that's another layer of security and another layer of risk. So let's just use simple numbers. Let's say the property was worth £100,000 and you've got £75,000 from a lender that's taken first charge. Then you've got £25,000 from somebody else who's, say, taken a second charge. You've still got no money in the deal. And now you've got to spend another £25,000 to renovate it. So that's your third level. And then you might have 20 grand of profit at the end. Yeah. That's your final level. Yeah. So it's understanding that these 4 levels, and I know everybody sees it in this way. This is just the way I kind of see it. At the end of the day, for me, security means you've got to do everything you can to make sure that they get their money back. And as I mentioned earlier, security means different things to different people. So the more you can understand what somebody means when they say, what will my security be? Then you can try and fit it into one of those. Yeah. So I've done lots of stuff as well that's unsecured, just down on personal guarantee. From me. Sometimes people say, oh, I'd never do unsecured. But it comes down to what people are comfortable with. Yeah. And what you don't also want to do is bamboozle people with all these different options because it's too much. You overload them with information, that leads to indecision.
Yeah, no, that's cleared up so much for me, because I always thought the only way was unsecured. So if you can't pay back an investor or a deal falls through, it's straight out of your pocket. But as you mentioned, there's a ton of different ways around this.